and the gold prices have steadied under $1,400 per ounce mark but are still trading under pressure. The traders are awaiting further guidance on Fed's policy. Physical gold buying has also been subdued in India and China. The gold-silver ratio has dipped as silver has outperformed the gold prices in the recent days. The gold prices remain under pressure from expectation that the central bank's commitment to ultra-loose monetary policy may be waning. Same really is the case coming in for crude prices, a third day of straight decline for that one as well. The weak dollar is something that has lent to some support into the prices, so nearly 0.25% up on your screens for that one. But the crude oil prices also would be looking at pressure from the increase in oil inventories and OPEC cutting global demand forecast for 2013 by 10,000 barrels on a daily basis there. Let's also get in there Vibhu. He's AVP Commodity Research Bonanza and joins us live on the segment. Vibhu, hi, welcome. Starting with crude prices first, and what's your strategy and sense coming in for that?
Definitely. Some fundamental news is quite bearish for the crude prices. As what we had seen, OPEC monthly report setting bearish on the crude prices. Even IEA report is also quite bearish for the crude because they are indicating light demand against the increasing supply for the coming years, or I guess 2013 or 14 also. So it might pressure quietly on the crude prices, but against this, the support from the rising equity market is quite supporting in the what we had seen in the last few of days. So I think on the level side, 53.80, 53.90 is a very good support level. As long as it's trade about the same level, I think this bull run will be continued towards somewhere around 56.25 or 56.50 level.
Vijay, how would you look at the natural gas prices now? Because we've seen inventories rise, the latest data that's come in from OPEC, IEA, all points slightly bearish to the prices.
Manisha, immediate support is at 214. If 214 is taken out, I'm afraid we are getting to a possibility of 208 also. I'm not very gung-ho on the energy pack, whether it's natural gas or crude oil. I think there is likely to be some amount of unwinding of long positions. And even if it means some amount of taking a hit or a small loss on recent build-up of fresh longs, I think that would also happen as the financially stressed bulls are likely to deleverage. So bottom fishing at this point in time on natural gas is not advised unless you're looking at 208. Even then, the open interest and volumes have to support the bulls.
Sure. Vibhu, how would you look at the precious metal space right now? Because, you know, there's nothing really working in that favor. The US dollar has strengthened. The Federal Reserves, or rather the central banks, could be pulling back money. And the physical demand that was seen in India and China also seems to be waning. So nothing in short really seems to be working for the price rise.
Definitely. After BOJ yesterday's announcement, it's more likely to that Fed will be on the next week meeting. Fed might be indicating some either indicating or either comment on the QE3 which might be ended very soon, which is expected earlier. So I think this pressure will be continue on the precious metals prices. Apart from this, rupee is quite volatile. Rupee is playing quite an important role because what we had seen in the international market, it's fallen somewhere around $14.25 to somewhere around $13.80 in the last 3 or 4 sessions. But the same story was not in the domestic market, MCX market. So I think for the domestic market, we need to look after 27,400, which is a very good support level for the medium term. As long as it's trade about the same, I think the scenario will remain more or less, I can say, range bound towards 27,400 to, I can say, 28,300 in the coming days. As long as it's the Fed meeting will result in the next week.
Vijay, how would you look at the silver prices? Because MCX seems to be holding around that 44,000 mark for consistently for many sessions now.
Manisha, ironically, I'm seeing some potential signs of green shoots of recovery in silver. And as far as outperforming gold on a relative basis is concerned, I'm not really surprised because I've had a positive bias towards silver. I think 42,500 odd levels, give or take a couple of hundred here and there, would be a good time to allocate another 10% to the physical buying of silver, 99.5% bars, uneven bars plus a watt extra. I think the expectation that we had earlier that silver would crack below the 40,000 levels at this point in time seemed a little far-fetched, so possibly prepone your buying to 42,500.
To the base metal space then, and surprise there, because you've seen some bit of a gain coming in for that one. Vibhu, how have you read the base metal sector? Because while we've seen very choppy moves coming in for the other commodities, this sector has kind of held on.
Yes, definite. Some choppy movies there because of I think China is on the holiday side and their demand is physical demand is not seeing last few of days. Apart from this, we are seeing some mix of the cues from the global economy. I think we need to wait for even Fed statement also. We need to wait for the European inflation data which is due on the coming Friday. All this will be indicating how the economy will be reviving and how the base metals demand or supply, whatever the scenario, will be reviving. So I think we need to keep eye on this. But as long as the level is concerned, I think quite of the base metals is in the bearish phase as far as the technical is concerned. If we can look after the nickel also, we can look after the copper also. I think copper is heading towards 405 or 404 level, or I can say nickel towards somewhere around 815, or I can say 795 also. So selling on the higher side is quite profitable in the coming days.
Vijay, what's your sense coming in for the base metal prices? Because they really seem to have turned around from the kind of declines that we saw in the previous week. How are you reading the gains?
Manisha, I think there's choppiness ahead, but overall, I'm seeing the swing highs and swing lows on a rising tops and rising bottoms formation. So at this point in time, I'm more inclined to buy the dips rather than sell the rallies. But as far as levels are concerned, I am not really very enthused about buying. I would want to wait, for example, on aluminium at close to 105.5, 106. Where lead is concerned, maybe 120 odd levels. Where nickel is concerned, 814 to 818 band would enthuse me about buying. Copper 404 to 408 band. And as far as zinc is concerned, I would rather consider buying at 102.5 to 104 band, depending on where the buying and open interest support the price. So given some more declines, yes, I would go out and buy, but I would not want to chase prices up.
Indian sugar futures hit a 2.5-month highs on an improvement in demand from stockists and concerns over a likely drop in output next year. A slowdown in imports due to a weak rupee also underpinned the sentiment. Now government officials are expecting lower production in 2014 in Maharashtra and Karnataka due to drought last year. Indian turmeric futures also rose more than 2% today on bargain buying, offsetting the timely progress of the monsoon and higher carry-forward stocks. The Jeera futures also rose due to fresh export demand, though higher supplies in spot markets and good progress of monsoon has capped much gains in this space. Joining us on the phone line then is Mukesh Kubadia. He is Secretary, Bombay Sugar Merchant Association, to talk more about the sugar prices. Mr. Kubadia, hi, welcome to the show. After much decline in the sugar that we have seen for many, many weeks now, last couple of sessions have been quite positive.
Yes, last couple of sessions positive because first of all there is a rumor that the government may increase the import duty from 10% to 20%. Also, the dollar has become a strong and rupees weakened, so the import will be cost very higher. Import cost will be higher. So that the Indian sugar may be going to the Kolkata and Punjab. Whether all the imported sugar are selling in the Kolkata and Punjab. So that is one positive note for the this sugar industry. Also, the next year production might come by 10% down. So that is also one positive factor for the sugar industry. But the price will remain the range bound between 30 to 40 rupees.
Okay.
Because the huge carry forward stock is there for next year.
Mr. Kubadia, then what is the expectation of the import duty coming in? Because that is something that the government, Mr. Sharad Pawar and the industry has been expecting for quite some time now.
Instead of 10%, the government hike by 10%, it will be overall the 20% import duty will be there for this next year.
Okay.
Because last year the Minister of Agriculture said that up to the September they are not going to hike the import duty, but the Sharad Pawar has told they hike the import duty. They might take decision within a week, I think so.
All right, Mr. Kubadia, we'll let you go at that. Thank you so much for joining us. So good gains coming in, and within 1 week you might be listening or hearing some decision coming in for the import duty as well. Which is just getting you in because, the whole summer we kept talking on how this is a season when you should be looking at sugar prices gaining, and that finally comes, but in monsoons.
Manisha, why are we not surprised? Because I've been talking about sugar gaining the closer we get to the crushing season of October 2013. And sure enough, the financial futures markets, which I was talking about mispricing the far-month future sugars, has now realized that October is not half as far away as they thought it would be. And it's better to catch the worm early and watch it grow. So I think after sporadic bouts of buying and selling, you will see a formation of higher tops and higher bottoms formations, and there would be a gradual upthrust with the rally finally peaking out towards September, if not October. So above average returns are possible for a deep pocketed patient investor trader who buys the 5-month future, funds the position, if at all it's needed, pay the mark-to-market position, then average down also.
All right, another important thing that can be expected tomorrow is the Union Cabinet on Thursday will consider a proposal to discuss an ordinance on the food security bill. The bill to replace the ordinance will be introduced in the monsoon session of Parliament, but chances of any special session of Parliament are almost nil due to technical reasons. The ordinance will guarantee per head 5 kg monthly subsidized food grain to 75% of rural and 50% of urban population. The ordinance also says that while state-wise quota for identifying the target population will be decided by the centre, the identification of eligible households will be done by states. The Food Security, or rather the Food Ministry, has pegged an annual cost of 1 lakh crore for the scheme that entails an additional expense of around 23,794 crores from the current food subsidy. Vijay, just getting your view onto that one as well. While we have been talking positive about a good monsoon and everything, the food security bill ordinance that's expected to come in markets tomorrow, how is that one expected to impact the food prices and the rupee as well?
Manisha, it's important to note that in the print and the electronic media, there were rumors or expectations that this ordinance would come. So it will not come as a total surprise. As far as the impact is concerned, I think the government will need to procure a whole lot more grains. For example, 11-12, the procurement of grains was 47 million tons, which is expected to go up to anything between 75 to 85 million tons, depending on what is the quality of the grain. So expectedly so, the government will edge out a whole lot of private players from the procurement process, thereby driving food prices higher. And as far as foreign exchange markets are concerned, I think as long as the USD INR does not go above 59.13, it would have digested this expectation. As a matter of fact, I do have a feeling that the passage of the ordinance of the food security bill itself could have been the reason why you saw a buy climax or a blow off, which you saw yesterday at 59.13 in the futures market. So the actual passage or the enforcement of the ordinance of the food security bill may not impact the currency market as much as it should have had it been a total surprise.
Fair point. And what commodities do you see an impact coming in? Will it be pulses or the rather wheat and rice, as the bill really has in its purview?
Manisha, effectively speaking, the procurement will be more towards grains. So possibly you could see some amount of sentimental buying in wheat. But I don't really see a runaway rally happening here. It's the pulses and the edible oils which are likely to see more action in the coming few trading sessions.